A big reform this week. The Reserve Bank was spun out of the Commonwealth Bank in 1960 to perform the duty as the government's banker, to also run our payment system and to print our banknotes. Since then, there have been key changes. There was the floating of the dollar in 1983. That meant the Reserve Bank no longer had control of our currency. In 1998, a new banking regulator, APRA, was created to take over the RBA's supervision of our banks. That same year, a separate RBA board was formed to control the payment system. Now, around this time, the Reserve Bank Board and its interest rate decisions became truly independent from government. So the changes prompted by 51 recommendations this week from the RBA review are the most dramatic shake-up of our central bank's remit in decades.
This is about bolstering the independence of the Reserve Bank, not diminishing its independence. And my goal here throughout is a world-class central bank which is more effective, more transparent and more independent, calling on more expertise to make its important decisions.
The crux of the recommendations go to the creation of a new board, a monetary policy board that makes interest rate decisions. The members of this board will be open to express opinions about monetary policy. They may give speeches. The voting of this board will be revealed after each rate decision. One of its key targets is inflation, still aimed at between 2 and 3%. But the board will have a new objective: full employment. The Reserve Bank will communicate more often. There'll be press conferences after each meeting, as happens at the US Federal Reserve and the Bank of England. But there will be 8 RBA meetings a year, not 11, to give more time for consideration and research if required. But there is one aspect of the RBA review that many won't have considered. A criticism of our central bank right now is that the board, though of high calibre, does not appear to rock the status quo of the governor and senior Reserve Bank officials when it comes to interest rates. If the board is not a rubber stamp of the RBA internal view, then none of us know, because we see none of the debate. But under the new plan, the external members of the Monetary Policy Committee would have enough numbers to overturn a recommendation from the internal RBA directors. And if it ever happens, we'll all be able to see it.